I'm Eddie Cannell.
And I'm Tom Cannell.
This is the Mortgage Brothers Podcast, everyone, and this is episode 15. Tom, welcome. And what are we talking about?
That's right. Today we're talking about pre-qualifications. Before we started, you were giving a number. How many of these do you think are given every month or every year?
Every month, I'm estimating about 5,000 Arizona pre-qualification forms are out there exchanging hands between sellers and buyers.
Holy cow.
And that's just here really in Maricopa County and Pinal. So,
and we were talking, I wonder how many people actually know what a pre-qualification form is. So I think that there's two different sides to the pre-qual form. There's the more technical and practical side, and then there's the principal side. Like, what is the main purpose of a pre-qual? But what we thought we'd do is go over the more technical, practical side of it, kind of run through it. This will apply to borrowers, listing agents, buyers agents, and everyone will probably have a little bit different area that they focus in on. But we thought we'd just kind of run through it. So Ed, why don't you start at the top? I think viewers or listeners will be not listeners, but viewers will be seeing something on the podcast, right?
Correct. So we're going to, there are some folks who are listening to this just on a podcast. So we're going to try to make this very helpful to you. But if you actually want to see any of the visuals that we're going to put into this podcast, you can just search it on the YouTube version and you should be able to see the actual pre-qualification form or any graphics we put up in the video. Okay. So just to start with, in Arizona, the Real Estate Association, the Arizona Association of Realtors, has a contract, an Arizona-specific contract. And along with that, they have an Arizona-specific pre-qualification form. So it isn't, some states don't have something that's specific to them. Arizona,
it's not a lender form.
Correct. This form is universal to every bank in Arizona. That's what the real estate agents, that's what realtors are asking us for, is the Arizona pre-qualification form. So right off the bat, what is this Arizona pre-qualification form? Number one, in most cases, it's actually the proof that a borrower is pre-approved. So even though it says pre-qualification form, it's really, most people who go through a lender and get pre-qualified are actually getting pre-approved. So that's just as far as the terminology.
Mm-hmm. Now, technically, the borrowers are not pre-approved, right? There are some groups that actually go so far as to underwrite deals and literally get them pre-approved.
So anyone who actually has automated findings would be pre-approved.
Okay.
So now the underwriting approval will happen inside of let's just say you have 30 days to close. That's the underwriting approval.
Okay. So basically, maybe we think about this. The pre-qual also equals the pre-approval. Once the underwriter actually gets the file and reviews all the findings and the documents and everything, then it's approved. There is no pre. So, correct. I mean, maybe that'll help people because we'll get calls. Hey, how good is your pre-qualification form? Does that mean they're pre-approved?
Yeah.
It's like, well, technically, they are pre-approved, but it still needs to go through underwriting. What? You need to go through underwriting still? Well, that's a very kind of typical standard, practice here in Arizona. There are unusual cases where we'll go through and get them actually approved prior to, and just have to fill in the subject property. But yes, this is a pre-approval / pre-qualification. And what we always tell our borrowers, Ed, is that our pre-quals are a little bit different, where we actually have conversations with underwriters as we're going through the loan, pre-qualification process. So even though we haven't, sent it through physically underwriting, we're still talking to underwriters. And our pre-quals are what we like to think is watertight.
That's correct. So, and I'll just start with, when we issue a pre-qualification form, what we're going to do is anyone who's interested in, and obviously they're listening to this podcast or watching it, is we're just going to go right through from the top of the form and just explain, I think, what we think are just kind of good highlights.
Perfect.
So,
okay. So yeah, what are the first things we look at? I'm always a little bit frustrated that the first thing borrowers look at is just a bunch of blank.
Yes, that's right. Lines 3, 4, and 5 are the three line 3, 4, and 5 on the pre-qualification form. Line 3 has to do. You would mark that box if you have not consulted with a lender. Okay, and you would sign on line 4 or 5 if you have, again, not consulted with a lender. Sometimes buyers or real estate agents will say, "Hey, why isn't the buyer signed line 4 and 5?" That's because that's not where those signatures go. Those signatures are only for borrowers who have not been, consulted with a lender.
Right.
So,
Okay, so that's always kind of a fun. I'm being sarcastic. Interesting way to start the pre-qual when you send them and they say, "Well, you left something blank, dummy." It's like,
yeah,
well, actually, the form makes us keep it blank.
that's right. We get a lot of those questions. Hey, why is this blank? Why is that blank? We work with these so often. Yeah, there are mistakes on them sometimes, but the next thing there's a lot of this stuff is very easy, and I think a low level. Obviously your name, whether you're married, the type of home, the type of financing. But the next line I'm going to bring everyone's attention to is line 8 and 9. Line 8 has to do with whether or not the buyer is relying on the sale or lease of a property. Okay, so this is going to come up. That's an important line, I think. If there's a sale contingency, it'll be marked there, is relying on the sale or lease of a property. And then line 9 has to do with concessions. Is this buyer relying on the concessions from the seller? So those are good to look for.
Yeah, so those are good. Of those two, I'd like to spend a little more time on number 9, which is the seller concession, because really number 8 on the sale contingency, it is what it is. It's very kind of black and white. Either you can qualify with 2 homes or you can't. The majority of our borrowers, well, maybe it's 50-50. Some can qualify with 2 homes and there's no contingency. Others, it can be a little tight, and they decide that they do want to have that contingency. But the bigger one is seller concessions. Is that marked? Is it not? Because the majority of our borrowers have the ability to actually pay for closing costs. But there's always an internal debate question that they could have with their lender, or just could have with themselves as to, do we make this pre-qualification contingent on the fact that we need help from the seller? Is it good to show that we need help, or is it not good? So that one is always a little bit of a tricky one that you and I have to take pause at.
Yes, sometimes real estate agents, when they're writing an offer, they'll ask us to mark that the buyer is, relying on those concessions. If they're going to be asking, sometimes they ask us to mark that. Sometimes they don't. And again, it just depends on how that strategy, how they want to work that strategy.
Mm-hmm.
Because relying on seller concessions, the word relying, can be subjective. I mean, if they have enough funds, but what if it may be too much? I mean, the buyer themselves may need it for other reasons.
Mm-hmm.
Okay.
So I got a call today from a borrower, and they're in the process of submitting an offer. And before they actually called me, I got a call from the listing agent, and they said, "I'm looking at the pre-qual, and I know that they have it marked as not needing seller concessions, but they've asked me for seller concessions. Do they need seller concessions from me?"
Right.
And so I took quick pause, knowing that I didn't want to give up any negotiation leverage. And I basically said that they can have it either way. And I think that was an okay answer, because I said it's a very personal decision for the borrowers. And who really knows, what it means to have the money? Just because you have the money doesn't mean that you can afford to give it. If you pay for all closing costs and you have $1 left in your account.
Yeah, that's a good way to put it. I guess that's what I was trying to say. Yeah, just because you have the money does not mean you really
have it.
Afford it.
Yeah, exactly. And so that one I like to kind of come back to at the very, very end when we summarize. But that one we do spend a lot of time on. Do we?
It's a real personal decision.
Yeah.
And so, and sometimes listing agents, will call and ask that question. Yeah, kind of put us on the spot. But and again, on these pre-qualification forms, this is going to be sent to the seller. So everybody, I know maybe that seems obvious, but the seller is going to receive this pre-qualification form when they get your offer. So they're looking at this. the buyer's agent is, the listing agent, and the seller. So they're all going to be kind of wondering, why is that checked that way? Why is that much of the way?
Mm-hmm. You know, this form could also be called a resume. I think if you were to send it over to the seller, and if you were to make this analogous to getting a job, the seller's literally looking at this saying, are these people, is this borrower able to fulfill the obligations that they're going to, contract themselves to in this purchase agreement? And it really is. It's a very brief profile of who you are and whether or not you have the ability to fulfill what you say you're going to do.
Yeah.
Okay. Well, why don't we just jump through? There's a number of lines that talk about the type of loan, the occupancy type, the property type. I think those are all very self-explanatory.
Yeah. I think the next one I would probably highlight is line 20, which is a pre-qualification form on this one. It's saying that the buyer's approvals, a buyer can pre-qualify for a loan amount of, and it has its X. So that's the loan amount. In fact, there's no information about sales price anywhere on this pre-qualification form. Sometimes agents or buyers will say, where does it say the sales price? Or if I put 300,000 on that line, this is line 20 in that field. If I put $300,000, that means that's the loan amount. People will say, well, no, they think that's the sales price. A lot of times people get mistaken. Yeah. That's the sales price. No, there's just no sales price on the pre-qualification form.
And that's a big deal. We regularly have that conversation. Mm-hmm. So I don't know at one point if they will change that.
They probably will.
Yeah.
The most recent form we're working with right now has not been up. Is February 2017.
Mm-hmm.
And this recording is in almost July 2019.
Okay. Also, I'd like to make a little bit of a correlation to the seller concession conversation we had. Just because you have a loan amount of X doesn't mean that you have to have that loan amount. Again, this is a resume. This is something that's supposed to represent your ability to fulfill those obligations. So I would say the pre-qual ought to have kind of the worst case scenario. So if you plan on putting 10% down, do you need to have the loan amount reflecting a 10% down payment? Not necessarily. I mean, it can, but just think about this. If you're going to the borrower or to the seller, you'd want to tell them under kind of the worst case scenario, I can afford your home.
Yeah.
I don't need to win the lottery. I don't need to put 50% down. I can buy it based upon kind of the minimum requirements. So just because there's a certain number in there, as long as the number is lower, then you have all that freedom. Now, if you mean
as long as if you're making an offer and the loan amount on your contract offer is lower than what's on the pre-qualification form, you're fine.
You're fine. If it's higher, then obviously that doesn't work because you're going over and above what you're pre-approved for. But just something that I wanted to throw out there.
Yeah, and I'm just going to add to that. I think it's just something that's happening. I'm developing a pretty strong opinion about this over the years. That a lot of agents, most agents, 90% of them want the loan amount on there to match their offer, which is fine. We'll do whatever the real estate agents want. But I do think, especially in a competitive market, it should be considered to put what the buyers can qualify for really and show the strength.
Mm-hmm.
Okay. It's not bad to show the strength. And I think that's what you were saying. I think that's partially what you were saying is it is important to show it's okay. You don't have to show your very best hand, but show a good hand. If you're making an offer and showing in your offer that the borrower's going to get a loan for $250,000 and it looks like the maximum they can get approved for is $250,000, it looks like they can't even budge.
Right.
Why not have that? Why not have that loan amount on the pre-qualification form at least be $20,000 more? Not to show, a lot of people say, well, we don't want to show our whole hand. Well, showing strength can win offers, and it's something to be considered. And I think a lot of brokers and real estate agents, should think about that.
Yeah, and I think you'd be very hard pressed to find a seller who said we decided not to go with that offer because they were too strong.
Right,
they just were too strong for us. They were too likely to close.
Yeah,
so
and they all know the game. everyone knows that, oh, you're just matching your offer with that pre-qualification form. They really don't know the true strength of that borrower.
Right. Right.
So
Right.
I think good agents know, should be able to look through that.
Yeah. Okay. What else?
The next line would be line 23 of the pre-qualification form. It says the interest rate is not to exceed, and in blank, a lot of lenders are going to put market rate in there. They're not going to put they're not going to put the highest rate, because technically what that means is if the rate got above, let's say 8%, the borrowers would not qualify for this conventional loan. And the lenders aren't going to put a high interest rate in that field, because it's very confusing to buyers. If I put 8% in there, people are going to get that, my borrowers, and think I'm going to charge them 8%. So a lot of times we put market rate.
So maybe if we all lived in the Garden of Eden and there was 100% trust and no one took advantage of anyone, we could actually put, this borrower is potentially approved for, up to $400,000 loan, as long as the interest rates don't go above 11.5%.
Right.
But the reason why we can't put 11.5 is because borrowers will look at it and say, wait a minute.
Yeah.
I'm paying 11.5%. It's like, no. So we will typically just put market. Also, if we were to put the realistic number, which someone could be saying, well, why aren't you putting the realistic number? Is what happens if pricing changes 24 hours from now?
Yeah, that field is really hard. Line 23 is always hard. Yeah.
Okay. All right. I think that makes sense.
And I think we're almost done here, folks. I mean, I think the next lines, which are line 25, 26, 27, and 28, right? Those have to do with the documentation that we've received.
Right. And what are they? Pay stubs, W-2s, tax returns, down payment,
right? Gift,
credit.
Yeah. And Tom, most of our buyers don't realize that we're answering these questions when we get them pre-approved. And if they don't send us pay stubs after our application, or their tax returns, W-2s, et cetera, then we're going to have to mark no on these lines. So I think this is really important for both the real estate agents and the buyers. For buyers, just to understand when they want to show the seller that they have strength and they've been thoroughly qualified, sending us that documentation is really important.
That's right. And it only helps the borrower. I don't think there's ever a situation where less is more in that case. And borrowers will tell me, well, do you need it? And actually the answer is, I guess I don't need it. I guess I don't even need to pull credit. And I probably could just have your first name and still be okay. But the pre-qual wouldn't mean anything. The seller would look at this and say, okay, so Ed and Tom have the borrower's first name, but don't know anything about the borrower. Don't know his last name, don't know really anything, and they're just telling me that they're pre-qualified.
Right.
So technically, we could send out a pre-qual. It just is only as good as what we receive.
Yeah.
So the borrower is totally in control, and the word need is a little bit relative.
Yeah.
They need it because it makes it stronger for them.
Yeah, and there are times it's a late Friday, and borrower needs a pre-qualification form sent. They don't have the documents. We send it and we put no, and that's okay. On Monday, they send us documents. We'll get it updated.
Right.
We get it updated. But as a seller and as a listing agent, of course, when you get these pre-qualification forms, you're looking for those pay stubs, W-2s. I mean, obviously, and the down payment source. Also, I think a lot of agents aren't looking at line 26 on that right, say where it says gift documentation. Is the borrower getting a gift? I think that's a helpful tip to sellers and listing agents. That will all play into the quality of the borrower.
Yeah. Okay. Good point. And then I don't know if this is the last point or not, but how long are these good for?
Line 35 is going to have the expiration date of the pre-qualification form. So the moment that would be, in most cases, 120 days from the time that we pulled credit.
Right. And that comes from the credit report.
Yeah. That's usually the date stamp. So 120 days, 4 months. And, that's now once that date passes, what the lender would need to do is repull credit and rerun the pre-approval. And reissue it. So the rest of the information is the lender information, the licensing, contact information. So at the very bottom is, Tom, right, line 42 is where the buyers actually sign the pre-qualification form.
Right. And you know what, in practice, they probably get signed most of the time, but not all borrowers sign them.
Oh,
so
yeah.
I don't think you need to break out into a serious sweat if you did not sign them, but it's an acknowledgement that you've given your broker the right to submit the pre-qual, with the purchase contract. So we did want to touch on that real quick. So Ed, anything else?
I can't think of anything else. Again, this form will change over time, but for now, this is the form, and anyone has any questions on it, let us know. I think we're done.
Awesome. All right, let's call it a day.
Time to go home.
All right, everyone. We'll see you, folks.
Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to Tom at azmortgagebrothers.com or yours truly at Eddie at azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisor before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.